Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan, trading week of March 24th through March 28th for the first week of spring. So our title for this week is Money Trading this Spring. So in this part one of our weekly trading game plan for this week, we'll try to help you make money trading this spring. So let's get started. Welcome, RT. Thank you for joining us in the chat today. If you had a great trading week and are doing well. So here's our Google document with our notes for part one of our weekly trading game plan for March 24th through March 28th. We keep our notes in publicly accessible Google Documents. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies and trade ideas for this trading week. You can find a direct link to this document in the description box below. We keep all of our Google Documents with our trading game plan notes in a publicly accessible drive, so you can refer back to the notes for this week as well as previous weekly trading game plan notes documents. And you can also find a direct link to this Google Drive folder in the description box. So firstly, we'll look at how the markets ended up on Friday, look at a breakdown of the major indices and the technology components. You can see the market indices ended up slightly positive at the very end of the day. Most of the day they were negative. Towards the afternoon, back up to even, so ended up just slightly positive, 0.08. NASDAQ 0.52 positive, mostly on market on close bar, and S&P 0.08 as well. Again, mostly on that market on close. So mostly a pretty negative day until we got to the close, and we had a significant buying right on the close in all the major indices. We did have more decliners than advancers, so 61% declining, 34% advancing. We only had 21%, 78% new lows. We've still got 32% above their 50-day, but we've got 67% below, so a lot of weakness under the covers. Also only 38% above their 200-day, 62% below. So we had that surge at the end of the day, mostly a bearish day. Did see a rotation back into most of the Mag 7 with the exception of NVIDIA. NVIDIA slightly down. Tesla had a rebound. Apple and Amazon, Microsoft, Meta. So as we've seen the past couple weeks on Friday, kind of a rotation back into the Mag 7s on Friday. Most of the other sectors mostly red. Flight to safety into JPM. Welcome to Ricky Khan, Fairchild. Thank you for joining us today. You had a great trading week and are doing well. So the news, some talk about privatization of Social Security, the next big tariff deadline, April 2nd. So again, some more tariff news coming out in this spring. Might change the historical trends for the spring. European, if they can rely on Fed for dollars. Major indices stage late rally. Diversification bets are winning. Stocks S&P ekes out again Friday, 4-week losing streak. See oil bounce back up off 65 up to 68, so range bound between 65 and 70 right now. Natural gas broke down slightly between below 4, had surged up to 450, back down to 4. So right now it'll probably get off of 4, probably retest 450 again. Gold continues to beast up. It tested 3050, bounced off 3000, so it looks like it might test 3000, then we'll see if it breaks at 350. Right now, the major indices futures pointing up with the exception of the rural, so pointing negative on small caps. Treasury yield down slightly on Friday. Now we've got the 30-year about 4.6, 10 2.5, 5-year at 4.0, although mostly for the week. Yields down, prices up, but generally pretty flat. Bitcoin gone up, retested that 85 level, got rejected off that, back down towards 80. So it's been bouncing between about 80 and 85 lately. So look at a breakdown of the major indices and the technology components, and you can access these via the links in our note, so in the screener sheets and Watchlist Google Sheets. Talk the Fed decision and commentary for the Fed decision. We did see a slight rebound after that Fed or no decision. They decided to do nothing essentially, with the exception of the roll off of their balance sheet. We'll talk a little bit about that. We did get a little bit of a rebound up to that pivot point, up to the day moving average, over from there, probably head back down. IWM getting slight rebound, although again, rate cuts is generally negative, but again, we got kind of an exuberant positive reaction to that Fed decision. At least they didn't raise. So then we'll roll over again, IWM and the Russell. So it's headed back down to its low. So with the SPY, didn't get up to its 200-day, rolled over again, headed back down to its lower trend line. And NASDAQ, not as quite of a reaction, so slight bounce, slight rollover, again headed back out to its lower trend line, quite a bit below its 200-day moving average. So again, even though we got a slightly positive reaction to that Fed no decision, like all the major indices are rolling over and headed to retest their recent lows again. So again, it looks like more downside to come, in my humble opinion. Technology components. Firstly, ARK-K, so innovation, growth stocks. Again, we got a little bit of a pop, broke above its 200-day briefly. Again, it's been pretty bound between that 200-day and that lower trend line. So I would expect it around that 200-day again. Biotech's been stuck along this lower trend line, so just chopping about on that resistance line. Semiconductors, not much coming out of the NVIDIA GT conferences. Didn't really get much of a pop out of that. Got a little bit of a pop, but otherwise they're kind of sitting in the 19 range. Not a whole lot of catalysts right now. So again, semiconductors flat. Broad technology. Looks like it's still got that Bang U in there. I kind of set with QQQU. So the Mag 7s, Bang U's been retired, so we've replaced that with QQQU 7 ETF. Not a lot of reaction, just chopping along that lower trend line. So again, just kind of rotations in a 7 movement. Broad technology, again, not as much reaction to that Fed decision. A little bit of rolled over, headed back down to test its recent lows. And again, the leverage long on the Qs just acting just like the NASDAQ. So hope that all helps. Welcome, Ketan. Thanks for joining us. Hope you had a great trading week and are doing well. Okay, let me grab a quick drink and we'll look at the groups and the sectors and the countries. Okay, if we look at the groups, the sectors from Friday, see kind of a mixture, wrote back into most of the Mag 7, so communication services, technology, consumer cyclical, some of that's Tesla, rebound, so again, rotation back into the Mag 7s on Friday. Most negative, real estate, basic materials, utilities, little of a risk on, back risk on Friday. For the week, mostly risk off, so energy, financial, healthcare, technology got a little bit, so we're starting to see a slow rotation back to technology. Again, defensives, industrial, utilities, materials positive. Only negatives were defensive and real estate. Month, everything red, so only the least negative, energy, healthcare, utilities. Again, very defensive stance for March so far. The most negative, technology, cyclicals, and community services. So again, mostly driven by Mag 7, Tesla, etc. Look at the industries. So again, the manufacturers, Tesla, rebound, and auto, some banks, some tech, some software. A lot of positive from Friday. REITs slightly negative. Coking coal's been negative. Again, most of the REITs pretty negative. Gold rolled over. Uranium slightly negative from Friday. Steel very negative. Some poor guidance coming out of the steel companies. Aluminum similarly. Again, silver rolled over. For the week, uranium very positive. Copper, oil. REITs slightly positive for the week. Some negative. Retail, more REITs negative. Aluminum negative. Steel very negative. Again, coal. Again, one we're watching for a rotation back down, looking for an opportunity there. Again, most of the REITs pretty negative. Silver and gold strong for the month. Copper strong. Retail gone negative, and guidance coming out poor on the retail and coal. Also want to look at the countries. Again, we're talking about rotation in international markets, looking for opportunities in other markets. Starting to watch this countries list a lot more and the performance of the international markets, looking for opportunities there. See on Friday, not a positive, so Argentina rebounded. India and Japan were positive. Germany slightly positive. Most negative, Turkey, Malaysia, China. Again, profit taking, I think, in China rotated back down. So possibly an opportunity for a bounce back in China. Mexico down. Some of the European countries back down on Friday. They had been running pretty strong for the week. Again, South Africa, India, Japan, Brazil positive. Europe really positive for the week. USA, way down. So again, why the rotation into the international markets are outperforming the US markets now. So some of the most negative, again, China, Indonesia, Malaysia. So we'll look at those. Mexico, Europe, Brazil, Europe, South Africa positive, India positive month, China about flat. Getting the most negative, Malaysia, Indonesia. So again, we will look at some potential opportunities there. You see USA quite a ways down. Australia negative for the month. So again, we're looking for opportunities in international markets going forward, outperforming the US now at this time. So I hope that all helps. Welcome to Old Bits or Alpha. Thank you for joining us today. Hope you all had a great trading week and are doing well. Okay, next we'll look at the economic data from last week, upcoming data for next week. Just a quick reminder, as the important economic data comes, I try to capture it as quickly as possible, posted in the Surf the Markets channel in our Discord. Our Discord's free to join. You can find a direct link to a free invite description below, also here in our notes. So very quickly, I try to capture the real-time economic data as quickly as possible, important economic news, post that in the Surf the Markets channel of our Discord, capture a screenshot from investing down the raw data. So again, our Discord is a great source for real-time economic news, real-time economic data. Love to have you join our Discord, actively participate. We've got all kinds of channels you can discuss all things trading, different asset classes, using different trading styles, different trading tools. So again, we'd love to have you join and actively participate in Discord. Okay, grab a quick drink and we'll go over the economic data, the highlights from last week, talk about upcoming economic data for next week. Okay. Today we got some retail sales data. Core retail sales pretty much in line, negative. Retail sales February year on year drop, still positive. For February month on month, lower than expectations. So again, we're seeing retail sales slowing down a little bit, although ex gas and autos was better than expected. So again, mild slowdown possibly in retail sales. Not much Tuesday, Wednesday. Mortgage rates bumped up just a little bit. Mortgage applications dropped, corresponding to higher mortgage rates. Oil inventories bounced up a little bit. Again, we've seen oil oscillating between 65 and 70. Got the Fed interest rate decision and the Fed SEP, so their economic projections. So first, their interest rate decision was essentially no change, still at 4.5. So again, holding rates for longer as expected. Their dot plot, their economic projections was more interesting as it kind of speculated, the curve kind of flattened out. So for this year, they're now only expecting 2 rate cuts, 50 basis points worth of rate cuts this year. Another essentially another 1.25, 0.3% the next year. Only 2 rate cuts this year. Again, 2 more potentially the next year. Their long term 3%, so eventually trending back down, but trend down higher for longer. Again, they dropped their projection from I think 3 was the average down to 2 now this year. So the probability, again, probabilities, I think, maybe one in June, probably not another one till December. Just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education, hopefully entertainment purposes only. Some of the highlights coming out of the FOMC statement. So in forecast only 50 basis points of rate cuts in 2025, down to 3.9. Factors coming out of the FOMC statement and decisions, they lowered their GDP growth projection from 2%, 2.1% down to 1.6%. So they lowered the growth projection, now down below 2%. They upped the unemployment forecast from 4.3 to 4.4. So they're expecting slow growth, higher unemployment than they were in December. So you're starting to hear people talk about stagflation, concerns over stagflation. Again, lower growth, higher unemployment, also higher inflation. So they raised their PCE inflation, which main focus is PCE, raised it from 2.5 to 2.7. So again, higher inflation, lower growth, higher employment, and core PCE forecasted 2.8. So again, higher inflation, lower growth. So again, discussions about stagflation. Although the market again didn't seem to really react overly negatively to this lower growth, higher unemployment, inflation, and a little bit of a bounce. I thought the word for the day out of the press conference, out of Powell's press conference, was uncertainty. So again, I think word for that press conference for this FOMC, certainty. The other term he threw out there that, in my humble opinion, I think was stake, was transitory. He got burned before using transitory. I think mistake again. I don't think this inflation is transitory. We can talk about that in detail. I talked about the impact of tariffs on inflation. Again, in my humble opinion, I don't think that's transitory. People have a tendency to raise prices. Prices don't tend to come back down based on tariffs. They can raise prices, blame it on tariffs. And again, I don't think it's going to be transitory. I don't think those prices are going to come back down. So again, my humble opinion. So some other highlights from the press conference. Says the economy's strong, labor market remains strong, inflation is still somewhat elevated. Inflation expectations have moved up. The tariffs, again, the driving factor. You don't need to be in a hurry. Again, they're going to wait to see the data. So again, don't expect cut anytime soon. We'll wait for the clarity. Again, no changes anytime soon. Labor market not driving inflation. PC prices up. Inflation expectations due to tariffs, but still aligned with their 2% goal. So again, they still think eventually it'll come. High uncertainty. No rush to adjust policy. Clarity. Certainty levels. Pain restrictions if the economy remains, but weakened if labor market, like ease if labor market weakens. Signs of increased tightness in money market. Tariffs tend to bring growth down and inflation up. The other thing they did is they slowed the roll off of their balance sheet by half. So he did talk to the preferred loss of mortgage-backed securities versus treasuries. So in my humble opinion, I think that's a little bit of a floor, a put on treasuries, but not on mortgage-backed securities. They'd like to pull those off. So those are the highlights that I picked up the FOMC statement and the FOMC press conference. Love to hear your feedback. Anything else you picked up on out of the FOMC press conference, statement, dot plot, etc.? What do y'all think of that? Welcome to Crow. I missed earlier. Thank you for joining us. Hope you had a great trading week and are doing well. So then Thursday, we got weekly job claims data, continuing claims slightly up again. So again, really people are having a little bit of time finding jobs. Initial claims pretty much in line, so finding a whole lot. So we're not seeing a rapid deterioration of the job market. The 4-week average up just slightly. So again, we're not seeing a deterioration of the job market. So again, no signal that the needs to come times. Friday, we had OPEX, option expiration, quad witching. And Friday, possible a little bit elevated volatility, probably due to the OPEX and the quad witching, but not excessive. So let's look at the rest of the economic data from last week and then the upcoming economic next. Talked about retail sales, business inventories in line, housing index a little down, markets, so bond auction not too bad, building permits pretty much in line, housing starts up a little bit. Manufacturing for February was a little bit better. Talked about mortgage rates, oil inventories, talked about the Fed decision projections. The T-bills way down, that's interesting. Talked about jobless claims, manufacturing getting a little bit better. Home sales up a little bit, getting a little bit lower mortgage rates recently. Natural gas storage up, better expected. So we saw a little bit of a drop in natural gas prices. Rig count down just slightly. Oil rig count down 1, total rig count up 1, so not a whole lot of change there. Let's look at the economic data for next week. Some global manufacturing on Monday. Bond auctions, housing and building permits on Tuesday. So we'll see if the lower mortgage rates benefit the housing market again. Mortgage rates on Wednesday, durable goods. Got better. So where they're just, their insight on their decision, their projections, economic projections, why they thought inflation's going to be higher, growth's going to be less. Thursday we get GDP. So again, expected to still be positive, but down. So we'll see if that continues to trend down. Core PCE, we'll see if that happens to spike up a little bit. Could be negative. Weekly jobless claims data. And Friday, more PCE data. So again, we'll see if there's any impact. Impending tariffs on the PCE price. Again, if that spikes up at all, could be negative. Personal spending. We'll see if spending continues to decrease. And then we get Michigan sentiment. Again, that went negative, popped up. Inflation expectations popped up last time. Again, that could create a downturn in the market if inflation expectations continue up. If sentiment continues to trend down, again, could be negative in the market. So we should be wrapping up this earnings season, then we'll head right back into an earnings season. So you can see if there's anyone that has earnings for next might impact your trading. Some home builders. So the last home builders guidance been kind of poor. How's the high mortgage rates for longer, holding off, making buying decisions. Some technology companies, 3D printers, so might see a change there. Some Copen, DeBoozy, and those guys. You can go through the list and see how that might impact any decisions, gold miners, etc. So I hope that helps. We'll update that with the next interest rate decision. Again, you can get the whole calendar and via the link to the Fed calendar in our notes. You can hear how we trade around earnings via the link to our video in the notes. Grab a drink, look at the market screen, and we Welcome to Nas. Thank you for joining us today. Hope you all had a great trading week and are doing well. Just a quick reminder, if you're not already using Webull, you can still get 20 free fractional shares of stock by opening and funding your account with as little as $500. Each fractional share worth $3,000 to $3,000. Use our affiliate link in the description box below. You can get your free fractional shares of stock, take advantage of the promotions they have at this time, and also help support our BeachBum trading community, all of which we greatly appreciate. We're looking at the market screen in the online browser version of Webull. Firstly, we can see the distribution of advancers and decliners. So we had significantly more decliners than advancers, even though the indices were slightly positive at the end of the day. And the percent of decline was relatively small, but far outweighing the advancers. Not a lot on the tails, a little more weighted towards the decliners. It's interesting, we got a net positive flow, so it looks like that flipped. And we heard some Trump supposed flexible tariffs coming up in April. I think that caused the reversal. It was NASDAQ was significant negative, got a bit of a reversal right around noon. They all both ended up positive towards the end of the day. And that looks like the NASDAQ at the end of the slightly outperformed the NYSE. Also, the gauge bumped up a little bit. We had hit a low of about 9. So previously the low was about 9. Last week it's about 14. Now it's about 16 on Thursday. Now we're at 18. So fear is slowly abating. And your chart kind of messed up in Webull right now. Looks like they've got their axis flipped, so we can't really trend right now in Webull. Hopefully they'll fix that soon. You can also see the earnings calendar, etc. here in the calendar section in Webull for next week. So next week, see who's got important earnings. There's AT&T on Monday, so that might be significant for some of the communication stocks. And you can go day by day and see who's got upcoming earnings. There's GME on Tuesday, so maybe meme stocks will have a resurgence on Tuesday. We'll see. Let's look at the best performing industries for the week. Uranium again, rebound in uranium this week. See if we get a little rollover again. UEC positive, URG, DNN. Curiously positive, oil and gas, banking, oil and gas, banking services, financials, aerospace. Again, they awarded a new 6th generation fighter to Boeing. So positive for Boeing, negative for Lockheed Martin. So also it'd be good to know their subcontractors. Be positive for the subcontractors to negative for the subs to Lockheed. Slightly positive. Consumer goods, oil positive. BT, PBOT. Retailers actually mostly positive. Mining positive. Pharmaceuticals positive. Transport's kind of it. Look at the ETFs. So India up, short the Russell. That's probably the short on the cap. On the Dow, mid caps. So it's like positive on mid caps in the S&P. Long NASDAQ. Short the Russell, short small caps. Industrials, pretty negative, so rollover in industrials. Healthcare, mostly negative. Financial services, real estate, energy, negative. Utilities, communication services, positive. Technology, mixed. Basic materials, negative from Friday. Copper, positive though. Defensives, again, rotation out of defenses into the Mag 7, slightly into higher risk on Friday. Commodities, wheat up, palladium, oil. High yield. Okay, let's look at the future as well. Dayton, I think, as we saw in the groups and sectors, part of our strategy, I think, slowly be a rotation back into some of the technology. Again, we're just starting to see that, and that's going to be part of our strategy going forward. Although, again, potentially some more downside, so be prepared for that, especially if we get some negative reactions from inflation data or, again, more tariff news, etc. Okay, if we look at the futures, we saw a little bit of a rebound after that decision, and all the indices look they're kind of flat, rolling over. So we got a doji, and then we got a hammer on all the indices and the futures. So again, we had a little bit of a pop. Looks like they all kind of rolled over, even though we had that positive reaction late Friday. Looks like they're rolling over. Thing with the Russell, had a little bit of a gap down on the Euro stocks. It had been testing that top. See if we get another downside on Euro stocks. We do have ETFs you can trade the Euro stocks long and short. So if you think there's more downside, you can trade that short on the Euro stocks. DAX still holding near its top. We talked about how you can short the German markets, short the DAX by shorting the I think it's EG ETF. We talked about that like last week. Again, not a whole lot of reaction out of the VIX. Dropped back below 20. So let's look at the term structure on this term structure tool, which you can find on our homepage, beachbumtrading.com. Bum with the U under links. Go down to reference links. We can find the VIX term structure. So we see we've got quite an interesting curve. Right now, the current VIX is significantly below the structure curve. Got a little bit of a flattening out until June, and then an up in July, and then trending up into October, and then flattening out. So smooth as we've seen in the past. So get a little bit of a bump near term, probably tariff news, and then again flat for a little while, and then uptrending going into the fall. It's kind of interesting. We see again recently it's below the overall curve, so the overall curve still significantly above the current VIX, so more potential upside. Again, if we get some tariff news, again, futures kind of cheap right now, so those of you that took advantage, K-Ton, Easy Mike tends to buy VIX futures on Friday, so looking for a pop out over the weekend, so seems to be a pretty good strategy of late. Okay, oil bouncing off 65, it's at 70, just kind of chopping up and down right now. Not a whole lot of catalysts until we get the OPEC decision in April. They say they're going to increase production in April and might drop this down. So on a dip in oil, we're looking for a monthly dividend payer on oil, U.S. natural gas. Long-term trend is up. A lot of volatility, a lot of up. So we see it broke out above 450, came back down pretty quickly, downtrended 4, dipped a little bit below 4, and we'll see long-term generally up. Easy Mike did mention that in the spring we shut down some of the natural gas plants for cleaning, so we'll see if that has any impact. Gold again, strong trend up, tested 30.50, got rejected, probably 3,000, and then potentially uptrend again, and just strongly trending up. Silver tested 35, rejected, might come down to 33 retest, possibly up. Long-term trends are definitely up. Gold and silver, copper the same, platinum and iridium, flatter oscillation, so they both rolled over as well. Cattle up, grains trending down, although it's flat. Again, wheat tested that almost to the 50.80, rolled over. See if we get a retest of 540. Lumber holding high, again, impact of tariffs. Again, treasury yields kind of oscillating, treasury prices kind of oscillating, but generally pretty flat, trending up. So trending prices up, trending yields down with significant flat volatility. Dollar did rebound slightly back up in the 103s, didn't quite get down below 103, and back up. Euro rolled over, test after that, strong up. So I think there's more downside in the euro. We do have long and short ETFs you can trade on the euro. So if you think it's going to continue back down, you could test that or use that ETF to short the euro. Yen's been pretty flat. So I hope that all helped. Okay, we'll come back to ETFs after we talk about our theme for this week, which is make money trading in the spring. Let me grab a quick drink and we'll look at the historical season for the spring. Okay, again, our theme for this week is to make money in the spring. So we'll look at the historical seasonality that occurs in the spring. Also, we've previously looked at trading in the spring. You can refer back to our previous ideas for making money trading in the spring. We also have several videos on how markets typically perform in the spring and also the best performing sectors industries in the spring, so you can refer to those as well via the link in the notes. So if we take a look at our graph in the article in investing.com for the spring. So we just started into the spring in March. So again, you can see today March is a positive month. So in the past 24 years, average 1.46 up since 1928, 0.6 up. April's also very positive. So most positive month in the spring is April. So seasonality is up, although the markets have been trending down. We do expect a rebound. Again, all the tariff talks may throw a monkey wrench in this traditional seasonality. April is up 1.69 the past 24 years, up 1.3 since 1928. We get our sell in May and go away crowd, but the past 24 years, May's still been slightly positive, 0.49, although since 1928, slightly negative, 0.06. Then we get a rebound historically June, so since 1928, June, up 0.79, but since 2000, it's actually been negative. So we see a slight shift in the seasonality in the past 24 years, whereas previously May was the low point, got a rebound in June. Now we've had June be the low point, but again, definitely downtrending after April. So we'll see if we get that swing back up end of March into April. And then again, you get the sell in May, so we get a drop off into May. So again, the best month spring would be April. So we'll look for that bottom, that swing back up, play that accordingly. And then again, you get the sell in May. So take profits in April when that tops out. Front run the sell in May crowd, although again, May slightly positive, and June the most negative in the past 24 years. So hope that all helps. Again, we've also done several discussions on trading in March. Next week, we'll look at April in more detail as well. So you can hear our previous discussions about making money trade in March, best performing sectors and industries in March, how the markets typically perform in March, via the links to those videos in our notes. Now we'll go back up to our ETFs. And when we come up with our trade ideas, trade strategies for the week, or in general, then jump over to our ETFs Google sheet and identify ETFs, and trade those ideas, those trade strategies, be they long or short, index, commodity, topic, theme, even individual stocks, by using our ETFs Google sheet. And you can do likewise, get 24/7 access to our ETFs Google sheet by joining our Patreon. So I'm gonna grab a drink and we'll talk about some relatively new to our ETFs Google sheet. If anyone in the chat has particular ETFs you want to look at, a theme, topic, index, trade idea, please throw those up in the chat. We can take those ETFs. Welcome to Crow if I missed you. Thank you for joining us. Hope you had a great trading week as well. So just some quick updates to our ETFs Google sheet. So removed ALUM, which was an ETF on aluminum. Apparently that's no longer active. Unfortunately, we don't have any other ETFs solely related to aluminum, although we do have a number of base metals. So again, we do have a couple individual stocks on aluminum in our research sheet. So currently wasn't very popular, so they retired that one. Did want to highlight relatively new ETF we did on New Zealand back, I think, last week. So let's take a look at that one. And so a couple other international market ETFs that I've been watching I'd like to highlight. So let's look at ENZL, which is an ETF on New Zealand. So if we do a find on that in our research sheet, here's ENZL. See, currently it's about 41, so it's relatively low. I'm near its support, so it's been relatively down. You can see the word profile is not real from a 52-week standpoint, but return 2.37. So might be of interest if it continues to come down. We can look at the FinViz profile. And you can access the profile of ETFs via the link in the FinViz URL column in our ETFs Google Sheet. And you see it's been trending down, so steadily trending down. And high about 50 or so, down in the 40s now. Looks like it does pay some annual dividend, 60 cents. The 2% yield. AUM's kind of small, 69 million. Volume's very light, so 6K, so probably choppy, somewhat illiquid. Expense ratio is pretty cheap, 0.5. It is optional, it is shortable. So if you think New Zealand's going to continue to trend down, you could short the ETF if you can do so in your trading account. The performance been negative. See, it's pretty diversified, a lot of health technology, transportation, utilities. See the highest, largest holdings, so healthcare, airport, energy. Not familiar with most of these, a lot of healthcare. So again, this might turn up with health technologies, healthcare. MSCI New Zealand 2550 in economic character substantially in the index, free float adjusted, market cap weighted, large, mid, small, equity market New Zealand. We look longer term. So again, it's relative to the support about 40, rebounded up to about 50. So again, only about a 20% range there. Forward looks like a pretty good pivot point. High is in the low 70s, so a little bit better risk reward. So if anyone knows of, reasons, positive or negative, for the economy, I haven't heard any tariff concerns, but we'd look at concerns. Haven't heard any data builds or anything like that in New Zealand. Again, I'm not familiar with a lot of news, but it's an interesting addition. We do have Australia, Indonesia, Malaysia, Thailand, Singapore, etc. So that whole Southeast Asia area. And you can also see the composition in the ETF database. You see their pro base, more information about their holdings, energy, property. Let me know what you all think about this ETF. ENZL. Trade New Zealand. Do you think New Zealand's going to rebound, trend up, or continue to trend down? Why or why not? Please let us know in the comments to this video or in our Discord. Again, several of the others I've been watching. Thailand, Malaysia, and Indonesia have headed down. So I've been watching ETFs from Malaysia and Indonesia. Again, you can do a search. You'll find in our ETF Google sheet, find ETFs for various countries, as well as other topics. So if we look at the WM for Malaysia, so similarly, it's downtrending. The back. So again, some discussion about data centers in Malaysia. Also been watching PhD Thailand. The one we've got in our ETFs Google should have a rebound. Kind of a trend line. This looks interesting as well. Again, some we've been watching. Indonesia. Again, you can find all of these, watch all of these in our ETFs Google sheet. Indonesia's IDX. So it was down. So I need to adjust that support level. So right now it's showing a pretty good risk reward. In Thailand, there was some SoftBank building a data center in Thailand that might get a rebound. Didn't seem to have much of a positive reaction. Again, Indonesia, very similarly trending down. That one is not optionable, is shortable. So if you think that'll keep trending down, you could short Indonesia, Malaysia. Love to hear anybody's feedback as to any of these Southeast Asia countries that you think might have a positive due to the tariffs on China, etc. Also been watching South Korea. I think some of our traders, etc., got into South Korea on that bounce using Koru. We also, there's a leverage long on South Korea. We have others on South Korea. You can see it kind of trended back up. So again, we're very interested in watching these international markets using our ETFs Google sheet. We can find countries, Brazil, trending back up. BRZU is a leverage Brazil. So I think EWZ is the basic one. So EWZ, I think Easy Mike and others have been trading EWZ. BRZ is the long on Brazil. Get leverage. So I hope that all helps. I'll try to keep an eye on the chat. Just very quickly, and you see all the long and shorts for the various indices, technology components, biotech, art, Bitcoin. Again, here's Brazil, cannabis. Been watching coal, and we just have, there is an ETF for coal. Risk reward's not quite as good, so there is a coal ETF if you're in that. And it's a low, real broke its support. For coking coal, we watch MET-C, so we're watching that one for coking coal. Thermal coal BTU. Also wanted to just point out, we're going to run out of time again today, but I've added a couple gold, silver related or gold related ETFs in the research sheet. So bar and shiny. So a couple additional ETFs you can check out in our research sheet. Shiny was one mentioned by the Crow a while back in our chat. So again, both of these are now in our research sheet, so you can compare the risk-reward profile of Shiny bar to the other ETFs we have on gold. Got long and short, some are on the futures, some are on miners, some are on the spot price. So it's worthwhile to look at their composition, see which one you want to trade, the futures, the spot price, miners. Miners have still been lagging. I see we've got another one, ounce. So here's bar. So they're all long on various aspects of gold. You see shiny is a 3x leverage. So if you think gold's going to swing back up, continue trending up, catch the trend, you could use shiny, bar. Also, we've got GDXU, GLL, it's a short. Can Mexico bounce back up? But again, risk of tariffs, gas, again, rolled over, so cold and boil or long went out. Oil, short, drip or SCO, long on a bounce, gush for UCO, USO. We watch US bottom for our dividend payer. Probably take USOI out of there, possibly replace SOY. So we've done our shopping list. Again, semiconductors, long and short, silver. Also, we have plenty of single stock ETFs or uranium. Been watching that. Again, it bounced back up. Looking for a bottom in URA. To trade leveraged long with URAX. And watching wheat. Did bounce up on Friday. If it comes back down, trade that with WEAT. And we've recently added one of these days, hopefully we'll have a chance to look at these in more detail, but we've added more single stock ETFs on Coinbase, Meta, Netflix, etc., Robinhood, only a long. Recent additions to stocks. Find those also research in our ETFs Google. If you're looking for a single stock, ETF, thematic, etc., you can do a search in our ETFs Google sheet. See if we have one. Again, they keep coming out new ones, so we'll add those as we have the opportunity. If you'd like us to do research on any other ETFs, please put those in the comments to our video. Tag Discord, BeachBum Trading, all lowercase, no other characters, symbols, etc. Anyone else is an imposter, please ignore and report them. Please let us know if you like us to do any research on any other ETFs, any stocks, etc. Also, we really need your feedback on what we can do to improve our weekly trading game plans. Of our other videos, tools, ETFs, Google Sheet, any of our other Google Sheets, or our community. What can we do to continue to add value for all of our BeachBum traders? We hope you like content. We hope you'll click the like button on our videos. Help us the YouTube algorithm to show us some love someday and share our content with more traders around the world. Also really need and appreciate your help. If you would share our content directly with fellow traders, post it on your social media sites, etc. Invite your fellow traders, join us in the live chats, join us in our Discord. We would greatly appreciate it if we together to build our BeachBum trading community and help add more value for all of our bum traders. Thank you again to everyone who participated in the chat today, for everyone who's watching after the fact. Hope you'll come back again tomorrow, 10 a.m. on Sunday, part 2 of our weekly great trading plan for this trading week, and 10 a.m. on Saturdays for part 1, 10 a.m. on Sundays for part 2, and we hope to see you all again then. Thank you again. Have a great